Hi, I'm Peter Rose, founder of Longwood Currency Trading. Using the NFP to get out of Forex trouble. That's an interesting clickbaity type of title for a video, but I just use that and I'll go through and explain it. You know, I've probably lost more money than I'd like to admit trading the financial news, not the news, not fundamentals, but trading financial news releases, NFP, housing starts, you know, that sort of thing. Because you have to look at the opposite here. Most people think, oh, the NFP is going to come out. There's generally a big swing, or the consumer price index is going to come out. There's going to be this big swing, and I'm gonna have my finger on the button, or I'm going to wing both ends of that potential move, and my target will get hit and it'll go 10 pips and then I'll get out. And that's the game that you play. More often than not, you're not only going to lose, but you're going to lose a lot of money. This is early June of 2025. And today was NFP day. And I saved my ass by getting out of a position by using NFP than I would ever consider trading it. And once I was clear of my position, that would just happen. So I'm not trading. I'm not going to trade for the rest of the day because I got my ass saved. And why should I go in a volatile Friday market just after NFP with all the turmoil that's going on? There's always turmoil in the world. I'm not just pegging this particular time frame in history. My videos are deal with processes that are inherent within market action, and they're not dependent on, oh, this is, you know, bricks that occurring and this is what we're going to do and we got to talk about that, or none of that stuff. These are things that we're going to find in our everyday trading. You can have an anomaly price move just in normal trading. The NFP today, price went in both directions. On a 5-minute time frame, it went 45 pips. And that's not really a big swing. I mean, that's 45 going up and down. And that's not really considered a big swing for NFP. Geez, I've seen 160 pips in just a couple of minutes swinging on NFP, because it is the biggest of and the most volatile of the economic indicators in the world, US-based indicator. Because of that volatility, it's very tempting to think that you're going to jump in on one of the wings and ride that for, what are you going to ride it for? 10 pips, 20 pips, 40 pips? How fast are you with the button? Look, I've tried this before, and yeah, sometimes I'll make it. But overall, if you go back and look at my trading history, I'm a net loser on trading something like the NFP. You can be there at the desk. The price starts to move before your trading platform news thingy releases those numbers. The little number thing is spinning and the price starts to move. So you can't watch what the number is. You have to watch what's going on. And all of a sudden it takes up like a rat's ass and it goes up. It goes up 20 pips, just like that. Boom, it's there. You hit the button. It goes up 10 pips. You're a hero. It goes down 30 in the next 20 seconds. You're out. If you're fast enough and it doesn't keep on going to 40 or 50 or 60 out. Remember, you're picking it up on the high side at 20 up. So a 40, 50 pip drop against you would only be maybe a 10 or a 20 pip relative from start for the price itself. It's nothing. It's nothing. It's very difficult to trade I'll call it spot volatility, an NFP, or you come into a large group of order being fired off because of order flow congestion somewhere, and you'll get a 20 or 30 pip spike in the price. Those generally don't happen in 50 or 60 pip 1 minute bars. You'll start to see the start of that in a 1 minute bar, and if you're a day trader, you get out and you flip in reverse or whatever, and you can manage those a lot differently than you can these news releases. So what did I mean by using the NFP to get out of Forex trouble? I was in a position they had taken a couple of days ago. It went against me, and it would come back, and then it would go a little bit more in my favor, and then it would settle back. And my rule says, well, if price doesn't do immediately, remember I'm a day trader, if price doesn't do immediately what you want it to do, then maybe you ought to get out. Not maybe you ought to get out, you get out. And so I did a couple of times, but price just kept wanting to go. And I had strong conviction that I was correct in my estimation of where price would ultimately end up going. And so I kept going in and taking the trade. And one time I'd make a couple of pips, and I'd lose a few pips, and I'd make 5 pips, and then I'd lose a couple of pips, and I was just probing at the market, which I shouldn't do. And once you start doing that more than a couple of times, you have to recognize that that's wrong. Well, I don't know what you feel. I have a rule condition that tells me when I should be stepping back from the table. And I didn't listen to that rule. And I got in the position, and it went 25 pips against me. And I thought, well, that sucks, but I should be okay, because no, I'm not going to be okay. I'm not going to be okay. And I wasn't. And it went 30, and then it went 40. And I thought, well, instead of doing a day trade, I'll go to a position trade, because I'm convinced on my position. So I'll just let that give that price room to breathe. So it went and breathed another 20 pips. So I'm way underwater, but because I've gone up to trade on the daily chart, I'm only about a half ATR out. That's nothing. You have to accept, if you're going to go to a day trade, a long-term position trade, you have to accept maybe an ATR or 2 ATRs or an ATR and a half of negative stuff until things rewrite themselves and you get in sync with the daily trend. So I'm good with that. But I began to see that was a patch to my rule. And my rules don't need patching. They don't need help. They don't need advice. My rules are specific. And they said, 40 pips ago, you should have got out of that position with an 8 or a 10 pip loss and called it a day and just lick your wounds. But I didn't. So I'm sitting there with this big loss, and I'm recognizing what I did. Obviously, too late in the game to go, I'll just get out. It was significantly against me, because I was playing a different game than my rules are written for, because I want to be flat at the end of the day. Well, I'm not going to be flat at the end of that day. So I carried it over, and it just stagnated there. I said, oh, that's good. It's stopped its negative moving. I'll continue to hold it. Well, it continued to go another 10 or so pips against me. So I'm underwater pretty good for being a day trade. I'm fine from the standpoint of a long-term position trade. It's immaterial, and that's why I'm staying with the trade. I've accepted the fact that this particular position that I'm in will transition from being a day trade grab to a long-term position hunt. And then I was getting toward the end of the week. This was today, actually, when I said, oh, geez, it's Friday. I think we've got a non-farm payroll coming up here. So I looked at the release time. Yep, 8:30. I mean, Eastern U.S. time. And you know what? I would suspect that there are a lot of people that are in the same boat that I'm in, and that when the NFP goes bad, there will be a big rush to exit that may drive the price the opposite way. And so if I put a stop in to take a loss, 'cause I can't expect to have price move to get me bailed out from where I was, I'll move the stop up so I take a 3% clip, and I think that's really reasonable. I think there's a potential there for price to react during this upcoming NFP, to take me out, and I'll take a 3% haircut, but that's far better than where I was at if I don't put my stop there, put a limit order there. NFP goes off. The thing hadn't stopped spinning, and price just went phoop. It went through my limit order by 4 pips, 5 pips I think it was, turned around and went the other way for 30 pips. So I'm out. I got a 3% loss. I didn't get a win on it because I don't trade the economic indicators to make wins. I'll trade them to get out of a bad position if I happen to be in one, because the probability of that being successful is far greater, like an order of magnitude greater, than I'm going to be able to make money on an NFP. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.